What's up, my financial fit fam? Adam here. And this week, the news just doesn't stop coming. We found out on Monday that Tesla is going to be added to the S&P 500. It's an index that tracks the largest 500 American companies by market cap. Although it won't actually join the S&P until December 21st, it's pushed the stock price way up. Almost 100 points at the time of the recording of this video, and now trading right around $500 per share. But what does inclusion into the S&P 500 really mean? Well, the index funds and the ETFs that track the S&P 500 now have to buy the underlying asset, in this case Tesla stock, and it's only going to push the stock upward as long as the market conditions are healthy. Tesla currently sits as the 11th largest company in the United States by market cap, and it really should have been in the S&P 500 a lot sooner, but there's certain criteria that needs to be met in order to be admitted into the index fund. In today's video, we're going to go over that criteria and what it means for Tesla going forward. So let's get going. It's like they're just standing there outside the club waiting to get in, but they're stuck behind the velvet rope. Come on, dog, let me in. No, we're full. We're at capacity. You gotta hang right here for 2-3 hours. We'll think about it. Come on, there's no one that's come through this door in the last 20 minutes. I said we're full. Sit here and wait. To be included in the S&P 500 is a huge accomplishment. It means that you are one of the most successful companies in the United States at that moment. But you need to meet certain criteria in order to be added. 1, you need to have at least $8.2 billion in market cap. Number 2, you need to be highly liquid. Number 3, you need to have a public float of at least 50% of outstanding shares that are available for public trading. So you would take the overall amount of shares, subtract out the insider shares and the major equity firm shares, and that gives you the total float. And lastly, your most recent quarterly earnings needs to be positive, as well as the previous 4 quarterly earnings all must be positive as well to be admitted. If you're enjoying this channel and finding value in the videos that we're presenting, make sure to subscribe and smash the like button because it helps this channel with the algorithm for YouTube. Please, 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 I'll do anything. All right, now back to our regular scheduled broadcast. Tesla's current market cap sits at around $473 billion, and it's up well over 400% on the year. Its market cap is larger than Toyota, Volkswagen, and General Motors combined. Tesla stock will increase due to the demand placed on it by the index funds. But truth be told, investors should really be focusing on long-term broad diversification. So because Tesla is being added into the S&P 500, that means another company needs to get booted. It can't be the S&P 501, right? We're talking about S&P 500. If Tesla is such a great company, why were regulators holding them back? Well, if you think to 2 years ago, there were charges against Elon Musk that he was committing fraud and that he even admitted the company was only weeks away from bankruptcy. There was no way at that point that regulators would allow them into the S&P 500. To put in perspective, the $2.4 billion of cash flow in the third quarter of 2020 was more than all of the operating cash combined since the inception of the company through September of 2019. I mean, the rise of Tesla was so fast that the regulators took a wait-and-see approach. Could they maintain and grow production? Could they maintain and grow revenues? And that was important before being added into the index. While Tesla stock is flying, there are concerns around the S&P 500. And the first of which is the forward PE ratio, or the forward price per earnings. Now, the average company in the S&P 500 trades at about 21 times their earnings. At the time of this recording, Tesla's trading at 122 times its future earnings. In order to justify Tesla's valuation, it would need to bring in about $10 billion per year in net income within the next 2 years. It's currently bringing in, over the last 12 months, about $556 million. Many experts agree that Tesla's valuation doesn't really make a whole lot of sense if you look at it from an automobile perspective. But if you think of it as more of a technology company and a company that is very disruptive within the space, you can justify the price point of the current stock value. What you need to understand is if you're buying Tesla stock, you are paying for the future growth of the company, and that may or may not happen. Just my personal opinion, I think it will. Get over it. There's no doubt that Tesla is changing the game forever and Elon Musk is a genius. Will the company ever get to the prominence and what we expect? We'll just have to wait and see. As always, save, invest, and grow. Ciao, ciao.